Hey guys, what's going on? Derek here from M1 Realty. Now I know I've been talking quite a bit the last several weeks about all this doom and gloom headlines that are like every article you read about the housing market, about how it's so horrible and it's about to crash and home sales are down, the whole 9 yards. So I wanted to share one that came out yesterday. I want to talk about it a little bit and give you some context about what they're talking about, because this one did a decent job about not, being all negative about the market. It was pretty, balanced about giving a good actual representation about what's really happening in the housing market. And as always, if you would be so kind, I'd really appreciate it if you'd like this video, subscribe to the channel, and most importantly, share this video out to anybody that you think would benefit from it. That just helps me get in front of people just like you who want to know what's going on in the housing market and get, no BS, know actually what's going on in the Metro Detroit market. Because most of these headlines are, about the national real estate market, and real estate is so hyper local that there's, not that many resources that talk about exactly what's going on in our backyard. So that's what we're going to do today. All right, guys, so let's take a look at this article that came out from Housing Wire. It came out yesterday. So, it's your typical headline that we've been seeing everywhere. It's mostly doom and gloom, about how the U.S. housing market's at a crossroads and our incredible home price boom is over. Honestly, maybe nationally, we'll see. I honestly, I don't think it is, and here's why. So let's talk about this report for a minute. And, how they're saying, the several respected market observers say there's less good and increasingly bad and ugly ahead for the housing market. The first paragraph in this article, talks about how there is some good in the market and how, in May, home sales jumped 11% month over month after they had declined back in April. And it's important to remember what happened back in April. That was like the first big interest rate increase that we saw after the Fed raised interest rates the first time. And it's also important to remember that this doesn't include anything from June. So this the June stats haven't come out yet. I'm shooting this the last day in June of 2020. So these stats end in May. But, we're just going to take that for what it's worth. And, obviously June stats will be out soon enough. We'll shoot another video letting you know how the market's been impacted by the most recent interest rate increase of 75 basis points, and that happened a few weeks back. And as of today, interest rates had actually gone down a little bit. Mortgage rates have gone down just a little bit. I mean, they're still much higher than they were at the beginning of the year. That's to be expected. We've talked about that quite a bit, and that's just a reality of what we have to work with moving forward. So the article goes on to talk about how in May there were 696,000 units sold, and that's 17% below the peak of December of last year of 839,000 units. So they're talking about so yes, home sales declined for the fourth consecutive month. They're not really explaining why. The reason why home sales numbers decline so much is because lack of inventory. There just aren't that many homes hitting the market, and we'll go into that a little bit in a minute. But that's what I don't like about these articles is they're doom and gloom without the context. It's like, why are sales so low? It's because there's no houses to sell right now. So let's talk. We'll go about talk about this article a little bit more, and then we'll break it down so you can actually see what I'm talking about when I mean that there's just the inventory is so low, and that's what's causing home sales to drop. A little bit further down in the article, it's talking about how price pressures have increased, real revenue growth has stalled, and optimism about the overall economy has fallen sharply. Well, absolutely it has, and we a lot of that doesn't have to do with the housing market, but obviously this is a housing market driven YouTube channel, so that's what we mostly talk about here. But yeah, I mean, we're potentially on the verge of a recession. Inflation is through the roof. Yes, people aren't super stoked about the economy right now, but that doesn't necessarily have a one-to-one corollary with the housing market, especially our local housing market here in Detroit, Michigan. And it's important to know that this article as well is basically taking a look at the nation as a whole. And I know that our local market is functioning a little bit differently than other markets around the country. So we got to keep that in mind as well. So this article goes on, it talks about the GDP and the impact that interest rate hikes are having on that as a whole. So again, nothing that really has to do with housing specifically. So towards the bottom, so what does it mean for the housing market in the months ahead? And of course, then they attempt to, frame some expectations. I'm not trying to frame anything. I'm just telling you exactly where we're at right now in June of 2020. So we'll see what this market says, and then I'll talk about where we're really at in our local market. Come from to cause that correction, then I might believe it, at least locally. I mean, maybe that's going to happen across the country and in certain markets, but as of right now, I mean, yes, what the interest rate hikes have done is eliminate some of the buyers that were competing over each house, but not all of them. There's still, fewer homes out there than there are people that want to buy homes. So until that's not the case anymore, we're going to continue to see prices rise. Now, they're probably not going to go like crazy, and I hope they don't. They need the appreciation year over year needs to come back to earth. Like, that's definitely unsustainable. But I get that these guys have to look at the entire nation as a whole, but it definitely doesn't really, as of today, doesn't really show the what's actually happening on the ground in Metro Detroit in the housing market. And again, so Moody's predicts that housing demand will dampen significantly in the months ahead due to the doubling of rates on a 30-year fixed mortgage. Yes, it is a huge jump. Mortgage rates went up a lot from the beginning of the year, absolutely. As of June 23rd, the average was 5.81%. That's about what we're seeing around here as well. But, I don't think the demand really dampened significantly. I mean, there's still many homes that were, just anecdotally, many of the nice homes that we're seeing are getting multiple offers, and they're selling really quickly. In fact, I just literally 2 days ago was in a multiple offer situation that we ended up winning the home, and we had to go a little bit over asking price, but it wasn't anything like, if this had been January or February when we were just absolutely at the bottom of the barrel in terms of inventory, I would have been battling, 12 to 15 other offers, pulling out all the stops, going well above asking price, with like just throwing everything at this offer that we possibly could in order to get the home. This one, I knew I was up against two other offers, so there were 3 offers total, which obviously isn't as crazy of a seller's market as when there's 12 to 15 offers, or even like 7 to 10 offers. But you get what I'm saying. We had to do what we had to do to get the home under contract, but we at least had a chance to get it done. When there's, when I'm going up against only 1 or 2 other offers, more often than not, I'm going to be able to get that winning bid and get that offer accepted. When you're dealing with a dozen other offers, it's a lot harder to make that happen. But just realistically, what we're seeing in the market right now is, we'll probably see that for the rest of the year. I mean, unless interest rates really go sky high, if they go up to like 10%, then all bets are off. I have no idea. But, yes, they've pretty much doubled from the beginning of the year, or, about 7-8 months ago, they were still in the 2 to 3% range, and now they're in 5.81 as the average. So yeah, that's scared away some buyers, but in the grand scheme of things, 5.81% is not a terrible interest rate. And the moral of the story is most really nice homes that are hitting the market are still getting multiple offers. So multiple offers implies that the list price is the starting point, and unless your home's egregiously overpriced and people are just coming in under asking just because your price so high, list price is the starting point. The final sales price is going to go up from there. So yes, we might not we might be coming back to earth as far as appreciation goes, but it's still going to drive home prices up more than if it was a balanced market and we can negotiate the price down instead of up. That's definitely going to bring about a price correction on the average sale price. But we're not seeing that, and I don't know where that inventory is going to come from. It's not coming from existing home sales. and builders are slowing down the number of homes that they're building, so it's not coming from them either. So like I get, that's probably what the numbers are nationally. They're not how things are on the ground right now at the end of June in Metro Detroit. Let's talk a little bit more about this article, and then I'll show you exactly what I'm talking about. And I will say, even this article kind of follows along with what I'm saying. They're saying there's two paths that the market could take. The one that is doom and gloom and horrible is hypothetical, and the one that's more realistic is what the numbers kind of bear out right now. So they're saying there's mixed signals. The fundamental housing strengths will likely help to mitigate any degree of market correction, at least over the next 12 to 18 months. Would have been nice if they used that for a headline instead of the housing market's at a crossroads, implying that it's heading downward. So you pretty much have to read all the way through the article to see that it's not really more than likely it's not like headed for some terrible crash. I mean, you never know. I don't have a crystal ball. I don't want to come in on this video and say we are not going to have a housing crash. I promise that, because I can't promise that. I have no idea what's going to happen with the overall economy, but as of right now, I've been saying this for months. This is kind of what we're dealing with, and that's why you guys check out these videos, because you want to know what is actually happening in our market in real time, as opposed to what all these headlines are telling you. But demographic trends are favorable. Underwriting, solid underwriting about standing mortgages, and what that kind of is getting back to is, I think, comparing that to the way that underwriting guidelines were essentially non-existent, in the early to mid 2000s, and that's what really led to the Great Recession and the housing market collapse 15 years ago, is because there weren't any guidelines. I mean, literally people's dogs were applying for mortgages in the dog's name and getting homes. People waiting tables at Big Boy were getting $500,000 mortgages just because they had good credit. Just insane lending practices. And in the wake of that, for as much of that corporate greed that didn't get corrected or punished, the mortgage end of it definitely got some guardrails put up. So we're not seeing that kind of thing now. Like, it's even rare to find an adjustable rate mortgage, although they are coming back now, since interest rates have gone up. They're the lenders are trying to figure out products that will make your monthly payment more affordable than it would be otherwise. So even in their less than best case scenario at the end of this article here, even if prices were to decline modestly, yeah, that's going to increase affordability and drive up demand, which is going to drive prices right back up. So really the only thing that I could see that's really going to have a massive impact on the housing market, short of getting drawn into some war or who knows what, and hopefully that's not the case, would be if inflation continues to spike as bad as it has been and keeps increasing at the rate that it's increasing, the Fed's going to have to raise interest rates high to get ahead of that and try and tamp down that inflationary issue. So that will definitely if interest rates get too high, absolutely it's going to have a negative impact on the housing market. It's going to bring prices down. It's really going to reduce demand. So that could happen. I'm not saying that it won't, but it's not happening right now at this very moment. So I mean, we'll obviously wait and see. I'll keep reporting back on a weekly basis, letting you know where we're at, but we're not seeing that right now. And I tracked it in the over the last 40 years of interest, where the average interest rate was, like, from 1980 until now, so I guess 42 years. The average over that time period was 7.17%, and right now with our crazy high interest rates, it's only 5.81. So we're still more than a percent below the average of the last 40 years. So that's why I get it. It's sticker shock. People were like, it was so cheap to borrow money for a mortgage for so long that people got used to it, and now that's not the case anymore. But it's still in the grand scheme of things more affordable than it has been for the majority of time in the last 42 years. Now let's talk about where we're really at in terms of real numbers, in terms of inventory and market pressure and things like that. Okay, so these are the real stats. These came out a couple weeks ago directly from the MLS. So this is, pretty broad. If you want I can get really detailed. I can go by county. I can go down to specific city. So if you do want more detailed information on a specific area, just reach out to me. You can call me or text me anytime at 586-491-5622 or 248-561-6155. I've got 2 cell phones because I'm crazy. You can always email me, dwerenka@m1realty.net, or just leave a comment down below and I'll get to you. So, but this is, just from a little bit of a broader standpoint, this is the entire Metro Detroit area, which for as far as the MLS is concerned, is Livingston, Macomb, Oakland, and Wayne County. Don't know why they didn't include Washtenaw, but whatever, it is what it is. So this is May 2022 numbers. So you can see that our closed sales were 4,074 homes for that entire metro area. And more importantly, down here, the inventory of homes for sale in 2021 was 5,196. That'd be May of 2021. And as of last month, it's 6,140 homes. And oh my God, that's an increase of 18.2% in inventory. That's a huge increase, right? So for historical context, let's look pre-COVID, because admittedly, the last few years have been absolutely nuts in the real estate business. So, let's look at what, things were before COVID happened. The market was, relatively normal, your usual fluctuations, this, that, and the other thing. We were, we have recovered from the Great Recession. Let's back it up 3 years and look at May of 2019. So May of this May, 6,140 homes for sale. So May of 2019, our inventory of homes for sale was 11,061. So, and it had gone down in 2018, it was 12,063. And, the number of closed sales was only 4,631. So, that was a normal-ish market. It was pretty balanced at that point. It wasn't a buyer's market. We've been in a seller's market, essentially since 2011, since we started digging ourselves out of the Great Recession. It's never really been a buyer's market at any point in time. It's always been a seller's market since then. This is like I think the highest sustained seller's market in history that we're in right now. So, that's kind of what we're dealing with. So, they can talk about, home sales are up, home sales are down, the amount of inventory has gone up, 18%, we're nowhere near where we should be for a balanced market. So that's what I was saying, you got to take all this with a grain of salt, because until we get some inventory back, it's, we're going to just be dealing with what we're dealing with, which is low inventory, which is going to keep home prices up, not down. And in fact, I actually had this exact conversation yesterday with a past client of mine, somebody who I've known for years and years and years, and I've, sold them several homes. But, we were talking about the housing market, and, he's someone who, helps municipalities write grants and use, some of the federal stimulus money that came in as a result of COVID, and he just kind of wanted to get my handle on the housing market. And honestly, I was like, I really wish that, some cities or someone would incentivize these builders to build, affordable homes. Like, I'm talking like in the up to 250,000, just, starter homes for people, because those really don't exist right now. The homes that are being built are nice, but they're all, larger homes in like the, $500,000 to $750,000 range for new construction. And I get it, that's where the money is for these builders. But, you got all these federal dollars coming, and cities and counties are trying to, figure out where to spend that money. Well, they could really, help the housing market out by actually giving us some supply, so, and, whether that be in just giving away land or giving them some kind of I don't know, it's just some kind of a grant to build homes for first-time buyers, because that's really the issue that we're having right now. Is there's just, you can see right here, there's just not as much inventory as a healthy market needs in order for things to function properly. So, when we had, back when we had, 11,000 homes on the market back in, 2019, I I never heard from home sellers that, well, I'd love to sell my house, I just don't know where I'm going to buy a home. I don't have any way to anywhere to move to. You know, that's the number one concern I'm hearing from anybody that I talk to that wants to sell their home. Well, problem solved, you know, if we're giving, you know, people a place to live, you know. So and everything that I've heard is builders are actually slowing down construction now because they're worried about the economy. So that's just going to perpetuate this thing, keep it going longer. So anyway, that's my 2 cents on it. So I'd love to hear what you guys' take on it is, or any questions that you might have. Definitely just post below, or you can always call or text me again, 586-491-5622 or 248-561-6155, or shoot me an email, dwerenka@m1realty.net. Again, thank you so much for watching, guys. I really appreciate it, and I hope that you found this helpful, because, you know, again, I'd just like to, you know, take these articles that are broad articles about the national, you know, overall real estate market, and just kind of bring it back home, talk about Metro Detroit, talk about what's actually happening on the ground in our backyard right now. So, you know, that's what I always try and do in this channel. And again, thank you so much. And if you'd be so kind as to like this video, subscribe to the channel, and most importantly, share this out to anybody that you think would benefit from this content. That just helps me get in front of people just like you who want to know what's actually going on in our local real estate market. And until next week, thank you so much. Let me know if there's anything I can do to help you guys, and have a great day.